In this video, I want to go over the current drawdown cycle and how to take advantage of this drawdown. It's always discouraging to go through these drawdowns, and we're going to go over that. We're going to go over the cycle of the drawdown and a way to take advantage of it. It's what I call the Blitz Package, and we are looking at the multi-charts, description, I guess, equity curve and drawdown curve of going back to June. This is only going back to June. You can see where this is in the drawdown curve based on closed trades. The calculations are a little different. I'm not sure why the multi-charts is a little different than what we show on an end of day. End of day equity curve is different than a closed trade equity curve, but the length of some of these closed trade equity curve would also indicate end of day. And so you see a spike down here. That could be intraday, where your closed trades are losers and your open trades are winners, and it doesn't represent the real equity drawdown. But here is the end of day equity curve. We're going to look at the cycle of this. I'm going to show you the Blitz package real quick, which really improves our opportunity as we go into the end of the year for some gains. And so here is the drawdown curve, and only 25% of our trades have been winners lately. And you can see the last time this happened, 25% of the last 12 days. So the last time this happened was in August of this year. You see right here in this column, FS on the Calcs tab, 25%, 4 days in a row. We've had 2 days in a row of this. So what happened on this? The daily P&L was right here. There had previously been 6 losing days in a row. We've had 5 losing days in a row to worst case drawdown. 1, 2, 3, 4, 5, 6, 2 winning days, and then back to 2 losing days. And so 25% of the last 12 days. And then what happened over, say, the next month or so, next few weeks? You see 25% here. Now this is a trailing average, so you could still have, depending on the sequence of trades, you could still have a winning day and still show 25%. So the next day after that, the second 25% day was minus 485. Keep in mind, we're on two in a row of minus 25% at a worst case drawdown after 5 losing days in a row. And you see the third 25% day was minus 485. Then you have 4615, 12980. You continue on a losing day, and then you have 2600, 5800, 11300. And so you continue on through equity peaks. And so from this the third 25% losing day, we've already encountered these two. And so then if you go forward to through these equity peaks, you see plus 61K, almost 62K. Now, I'm not saying that this is just one sample size. I'm not saying this will happen, but this can happen in cycles. You see these cycles of drawdowns and run-ups. And so if we go down here to this this curve right here, this is the percentage of winning days. This is 25% right now of the last 12 days. It's happened in August, and it hadn't happened since last August of 2021. And so it's been a year not having such a this kind of a losing streak as far as percentage of losing days. It happened in August, happened here. It happens, it happens over time. And so we've had, if you draw a line through there, it actually can get a little lower back in here. But we've had kind of this downtrend in winning streaks percentages. So, if it goes in cycles, past performance is not indicative of future results, but we typically see cycles in trading, and so that is what we're looking at as far as the drawdown cycle. This is updated through Friday's trade. You can see here 5 losing days in a row. Just each day was worse than the last, except these 2 days were sort of the same. And then here is the drawdown curve. Just a quick spike down. I'd rather have a quick drawdown if it snaps back than a long, extended, slow drawdown. But I want to show you additionally a Blitz package, and I call this the Blitz package, that we can add 10 more strategies that we've traded in the past. One new one that I'm going to be sending out with, as well as gap continuation, 2023, and adaptive moving average. And I'm going to show you the Blitz package next that could be traded to extend our drawdown and give us this bounce back opportunity, really improve the reward over risk potential. So calling in the Blitz package because it's, we're adding more strategies, and I'm going to show you which strategies we're adding as we scroll through here. There are existing old strategies that we're adding, one new strategy that doesn't make a big difference. And so we're adding you can add, potentially add 8 more strategies or 7 more strategies, or you can add 10 more strategies. I'm going to show you the difference here. The reds are the 3 that you could remove. These are optional. Adaptive moving average and adaptive moving average 2023 both. This one's in a drawdown. This one's in a run-up. And we want to balance the strategies that we had in a drawdown and a run-up. Parabolic VSDES. We've had that strategy. It's a new update, but it's not brand new. So we've had that. We really want to be able to add our zigzags. So let's start at the bottom on the NASDAQ. We really want to be able to add our zigzags. So this Blitz package allows us to add the zigzag strategies. A new strategy called tick retracer, which is not that significant. If you take it out, you don't see a big difference. Trend select, we've had that. VTNQ, we've had that. Momentum reversal. So momentum reversal, as well as gap continuation. We're not adding the 2023 version yet because it's at an equity peak. EVP1, there's 4 strategies that I've really wanted to add back, or 3 strategies I want to add back, and 1 new one, which is zigzag, momentum reversal, gap continuation, and EVP1. These are some of my favorite, 4 favorite strategies that don't have market internals that have done really well. And so I want to add it to the current setup of 18 strategies. Now, this is an optional setup. You can trade the current 18, or you can add these 10. And so I'll be sending these out this week to potentially capture this move up. And I'm going to show you the reward over the risk in this setup. And you can see down 27K, hasn't had a losing month since December of 2020. And let's look at the drawdown curves. Again, very cyclical. It's been in this range many times and has bounced back. It's sharper lately because the volatility is higher and index is higher. We're adding strategies like zigzag and adaptive moving average, which can take advantage of these more counter trend type price action that we're seeing, that we highlighted for Friday in the other videos. And so the risk is about 9K to the worst case drawdown, 9,300 to the worst case drawdown, and then you have let's see, you have potential run up. So January through May had massive gains. The average month was 102,000 with this setup, and it's tapered off since then. The markets have been just harder in general since June, and so we put our best strategy that we've had since June, and with just a couple of new strategies. And then through October, the average is $52,000 average. And so if you get $52,000 average, you see what it did. It averaged that last year, 101 and 15. That's over. That's a little over 52,000 in average. The average there would be 58,000 last November, December. You know, the previous 2 before that were tough. 2019 was a low volatility year. 2018 was very, very volatile. The average is 40,000 there. And so if the market dies or just chops the rest of the year, it'll be challenging. But if it gives us somewhat of a current market environment that we saw in October, the opportunity is there. I thought the October market environment was challenging. We started late when we phased in, but the average since June is 52,000. And so if you add that in here, you're due for 104K plus 27. So 104 plus 27K, potentially 131K in profits between now and the end of the year would bring us into that average of 52K going back to June of this year. And if you look at the whole year prior to this month, the average is 77K, so it'd be even higher. So if the averages repeat, you have 131K of profits would take place. Now, past performance is not indicative of future results, and the risk to worst case drawdown is 10K. So you should be willing to risk that. In our current portfolio, we are at a worst case drawdown. And right when you hit a worst case drawdown, we set this up so that we don't just exit on a worst case drawdown, because we anticipate worst case drawdowns. We want to give it room to bounce, but it's always difficult to know how much room to give it to bounce. And so this kind of sets us up in the Blitz Blitz Package to give us room to bounce. Trading the current 18 system setup. Now you could remove what I call the reds, VTNQ, trend select, and adaptive moving average 2023. And here's what you have. 29 out of 36, you risk 7,700 to a worst case drawdown. Here's what the drawdown curve looks like. I like this one as well. Very cyclical. It's been at these levels before many years, and the cycles are faster now because the volatility is higher. So that's a potential as well, those 7 strategies. And so I'm going to post the link to this worksheet so you can add that. And all you need is for this setup is some updates. If you're a subscriber, you will get these updates as soon as I can get them to you, hopefully before tomorrow's trade. So I wanted to share this setup with you. I like the potential reward over risk, and the market has been challenging lately, been very range bound. Anticipate with midterms coming this week that we could get some massive trends, and we want to be able to take advantage of those. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.